Imagine watching $40 billion vanish in just 72 hours. That is exactly what happened to Terra Luna. In the world of cryptocurrency, it was a catastrophic event that shook the very foundations of trust and investment. With digital currencies surging in popularity, the fall of Terra Luna would send shockwaves across the financial landscape. This was not just a loss of wealth, it was a monumental collapse that obliterated lives, savings, and the promise of a new financial order. To fully grasp the magnitude of this collapse, we need to explore the context that allowed it to happen. Terra Luna was born in early 2019, spearheaded by Do Kwon, a South Korean entrepreneur with big ambitions. The idea was simple, yet revolutionary: to create a stablecoin, a digital currency that would maintain a stable value, to circumvent the infamous volatility of cryptocurrencies. This stablecoin, known as Terra USD, was designed to be pegged to the United States dollar through an ingenious economic mechanism involving its sister cryptocurrency, Luna. The allure was undeniable. Investors were drawn to the promise of a robust protocol that appeared immune to the bouts of turbulence that plagued many other digital currencies. By early 2021, the project had gained immense traction, attracting billions of dollars in investments. In May 2022, at its peak, Terra became the fourth largest cryptocurrency by market capitalization, worth an astounding $40 billion. This meteoric rise was fueled by widespread media coverage, endorsements from high-profile figures in the crypto space, and a push from users eager to embrace the next big thing. But behind the scenes, the promise of stability belied a precarious foundation. As with many financial phenomena, what goes up often comes down, and the cracks were beginning to show. The rise of Terra Luna was more than just a story of financial innovation. It was a classic tale of ambition meeting hubris. At the heart of the project was its dual token system: Terra USD, the stablecoin, and Luna, which was used to stabilize the price of Terra USD. When Terra USD would dip below its peg of $1, Luna could be burned to create more Terra USD, driving its price back up. On the surface, it appeared to be an elegant solution to a deep-rooted problem in the crypto space. Investors enjoyed high yields for staking their Luna, which only compounded the excitement and investment. However, it became increasingly clear that this model was built on speculative behavior rather than true intrinsic value. As more investors bought into the system, it created a kind of echo chamber where optimism outweighed caution. But as confidence grew, so did the risk. The operation behind the scenes was like a tightrope walker teetering above a chasm, and when market conditions started to shift, that balance proved fragile. The beginning of the end for Terra Luna came in May 2022. In a shocking turn of events, a series of large-scale withdrawals from Terra USD began to destabilize its price. Those watching the markets closely witnessed a snowball effect, fueled by panic and uncertainty. Investors sought to cash out, and as they did, the price of Terra USD plummeted, leaving many to grapple with the fact that what was once viewed as a safe investment was now teetering on the brink of collapse. Allegedly, it all began with a mere rumor circulating among crypto communities that questioned the ability of the system to maintain its dollar peg. As news spread, the sell-offs intensified. By May 10th, 2022, Terra USD had lost its $1 peg and was trading at just 35 cents. The Luna token followed rapidly, plunging from over $100 to less than a single penny within days. No one expected that the dream of a stable cryptocurrency could dissolve so quickly. In just 3 days, $40 billion of investor wealth had evaporated. Luna users who had invested life savings watched helplessly as the market crumbled around them. The collapse was nothing short of catastrophic. Over 1,000 investors filed lawsuits against the company and its creators, claiming negligence and irresponsible practices led to significant financial losses. The South Korean government launched probes into the events surrounding the collapse of Terra Luna and the broader cryptocurrency market. Allegedly, regulators were questioning the validity of the claims made by Do Kwon and his team, scrutinizing their governance model and examining whether they had misled investors about the stability of the project. The legal battles would continue for years after the collapse. Prosecutors in South Korea accused Do Kwon of fraud and other charges stemming from the failure of Terra Luna. Meanwhile, the collapse of this crypto giant rippled across the entire cryptocurrency ecosystem, triggering drops in Bitcoin, Ethereum, and countless other currencies. It was not merely the collapse of Terra Luna, it sparked a crisis of confidence across digital currencies, causing panic and leading to grave concerns about the viability of the entire cryptocurrency sector. As investigations unfolded, many experts argued that the model Terra Luna deployed was unsustainable from the outset. The fundamental flaw appeared to be in its reliance on speculative trading to maintain value. Market experts pointed to the fact that while many exciting innovations could emerge from the cryptocurrency space, they operated in an arena fraught with risks, and Terra Luna was a glaring example of that risk. Do Kwon was not alone in this scheme. Allegations that his peers and the broader institutional actors in the landscape had played a part in magnifying the scheme's success and its devastating fall intensified scrutiny on a broader scale. As regulatory bodies began converging on the crypto space, the collateral damage left in the wake of the Terra Luna collapse was immense. Thousands of investors were left deep in a financial abyss, their aspirations of early retirement and newfound wealth reduced to rubble. In the aftermath, discussions around regulation, oversight, and accountability in the digital currency space intensified. Industry leaders, investors, and even skeptics called for new frameworks to prevent future meltdowns and safeguard investors. These conversations have pushed for clarifying the cryptocurrency landscape, aiming to ensure transparency, accountability, and consumer protection. In July 2022, Do Kwon faced a barrage of questions at a press conference where he sought to explain the rapid downfall of Terra. He claimed that the financial systems of the cryptocurrency landscape required trust to succeed, and that trust had been shattered. The former crypto king became the target of international media scrutiny, navigating a new reality as it became clear that he was no longer the visionary pioneers of this movement. Instead, he found himself at the center of an unfolding legal and financial quagmire. This is where we stand today, a blockchain ecosystem grappling with the ramifications of a fallen giant. Between market studies, regulatory frameworks, and the destruction of consumer trust, the lessons of Terra Luna are far from over. Critics continue to voice concerns about the future of digital currencies, urging that the industry learn from these painful experiences. These conversations are crucial as the world grapples with the implications of digital assets and their ability to reshape the future of finance. What transpired with Terra Luna serves as a cautionary tale for many in the cryptocurrency world. It stretches beyond mere finance, representing the balance between innovation, ambition, and the potential consequences of unchecked speculation. As history often shows, the most spectacular rises can lead to the most profound falls. And while the allure of cryptocurrency continues to capture the imagination of investors worldwide, the events surrounding Terra Luna will remain etched in collective memory, a stark reminder of the risks inherent in the pursuit of fortune in the digital age. This saga of greed, ambition, and ultimate demise echoes in the halls of every boardroom and trading floor as the world looks on, hoping to learn from the monumental failures of the past. If you found this story interesting, hit that like button and subscribe so we can keep making these videos. Tomorrow, we are diving into a story that is just as shocking. BitConnect, the infamous crypto Ponzi scheme that stole $2.4 billion. You will not want to miss it. I will see you there.